He just came out of the plenary hall listening to Li Qiang. He reiterated the confidence in achieving the growth rate of around 5%. He laid out some of the things that, as a private equity investor, you probably like as far as innovation and new areas of growth. What really stood out to you in his speech?
Well, first of all, it's clear that, Premier Li now feels more confident that the Chinese economic recovery is gathering momentum, and he's confident about hitting the 5% GDP growth target for 2024. More importantly, he also has, I would say, reiterated the government commitment to a free market-oriented economy, foster more competition, level playing field for private sector, and to foster entrepreneurship and innovation as the most important driver for China's economic growth.
Did you hear what you wanted to hear as an investor, potentially in new productive forces, what the government is putting their weight behind in new energy vehicles, into batteries, into solar? What do you want to see as far as making it a open environment for your pools of private equity to invest in?
Well, the enthusiasm the Premier has shared, about, his enthusiasm about, fostering new technologies and innovation as the key engine for economic growth in China, I think it's quite reassuring. This new jargon of new, quality productive forces really just mean, China can no longer rely on labor input, can no longer on more fixed asset investment. It requires on productivity, and the source of productivity growth is through innovation, through technological progress. I think that shows the Chinese leadership actually understands the theory of economic growth.
Yeah, and it has to be less reliant on property as a main driver of growth.
Totally.
But you feel confident in some of the measures that have come in the last couple of months from the central government? How so? What gives you that confidence that they could be cleaning up this mess that they're in? They've avoided some defaults in some private large developers, but still the confidence is pretty weak.
I agree. I think housing, specifically about housing, I have noted some of the recent measures taken by the government. I think those measures, can be helpful, but I would be skeptical in their own. They could just once and all resolve the housing problem. This is going to be a multi-year process regardless. So it's not going to quick overnight fix at all. But I think it's important to remember Chinese economy is much more than just housing. Okay, housing
it's about a quarter of it.
Yeah, a quarter is significant, but it's still, right? So it's a serious drag to the economy. But if China can manage to get the rest of 3/4 of the economy work, and realize unleash its potential, then China can still achieve pretty solid growth.
What would you like to see, and what do you expect to see from the third plenum, which is essentially 6 months delayed when it should have happened last autumn? The Central Committee will get together. The top 200 or so officials, 300 officials, are going to come out with their long-term planning. What is needed?
First on timing, better late than never. And the second, what's needed actually is not, it's not a rocket science, right? China does not need, a shattering, Big Bang, new theory. It's just more of what has proven the right model for China is really more reform, more open up, the continued progress or accelerated progress towards the truly functioning modern free market economy based on private property rights, based on entrepreneurship, competition and openness to the rest of the world.
But then how do you get off the cocktail of property development as a main driver of growth? I mean, we've already taken it down at the knees, but again, the government is coming out with, I wouldn't say welfare policies, but essentially to ask state-owned enterprises as well as local governments to come up and to buy up the excess inventory and basically repackage it into affordable housing. Is this a feasible plan, given Xi Jinping and the central government does not want to exacerbate debt, especially at the local government level? Doesn't this add to their burden?
Possibly, so housing, I think, is a big problem, as you mentioned. So it requires all kind of, proven measures like we have seen else in the world, or maybe some new measures in the Chinese context, right? So only time could tell whether those measures are sufficient. Or without the long-term, negative consequences.
Yeah.
But again, I just want to really get people's attention away from just housing. China is far bigger than just about housing. Okay, housing is important. I think the whole set of plenum you mentioned, or Mr. Lee's messaging, about the innovation. Free market economy, right? You have a boom or bust. Housing is a basic example. It happened in the U.S., happened in Japan, and in Europe. Here in the rest of Asia.
It sort of had to happen, right?
It had to happen, exactly. It's excessive optimism, overbuilding, expansion. Then, they find that the head of the housing price has to come down. Inventory has to be cleared out, right, to restore a new equilibrium. But what I think is important is really, really unleash new productive forces. So in the new industries, right? Whether it's artificial intelligence or the energy transition, and in case of China, it's also service economy, which is still underdeveloped, right? China has a world-leading manufacturing economy, but the service, is a mean now, right? So now with the highly educated population, with the urban middle class, the demand for services, for example, healthcare, right? Yeah. It's massive. So I think the Chinese government just really need to make sure to create the environment where new business creation, startups, innovation can take place.
Is the confidence returning, though? Confidence was sapped at the small to medium-sized enterprises, in particular, during the pandemic. There was no, safety net. There was no lifeline for companies that had to basically deal with 0% revenue growth through the COVID zero times. Really hard time. Do you see signs that there is confidence returning? It's not necessarily in the stock market. It's not in property developers, and I know I've gone back to property, but are those small to medium-sized enterprises that want to tap into these new productive forces and be innovative, is the confidence still lacking? Household confidence is still lacking.
I have seen clear signs of improvement in confidence across the board, not just the private sector in general and the SME, small medium-sized enterprise in particular, but also, even in the investor in financial markets, I've seen investor confidence slightly picking up. Okay, and of course, consumer confidence is also important, right? Holds the key to demand. Is also picking up. So, granted, they are not at a level where I would like to see. Right? Yeah. If they are really going back to the normal, then there's no worry about Chinese economy. It's going to be a very powerful, self-sustained, big economy, okay? And a major contributor to the global growth. But as we speak, confidence is still a concern, okay? It's not back to the normal before the pandemic, before last few years' difficulties.
Obviously, the geopolitics, is really focused in on the overcapacity issues. And some would also argue that if the central government is saying we are going to prioritize batteries, solar panels, and EVs, money flow should go into there. But again, there's no outlet for, or very limited outlet for exports because of the rising protectionism and the rising tariffs. You are a strategic investor. Would you invest in EVs at this time when they're not profitable at home and their export markets are shrinking?
Yes, I'm still very focused on the whole energy transition sector. We have been a significant investor in that space and very successfully. I can see some of the challenges right now at this particular point in time. But, Chinese energy transition does not depend on exports, okay? Because China itself is the biggest market in the world, right? In terms of new investments, in terms of consumption. EV, for example, every 2 EVs sold in the world, 1.3 sold here in China, right? So there's huge demand here at home. But of course, the terminal place, like anything, just when people see the attraction of EV, that has a lot of new investment, new projects breaking ground, right? So temporarily, that may have created overcapacity, but demand is going to pick up because the penetration. China is the highest in the world, right? But still, there's a long way to go to phase out the ICE traditional vehicles, completely, right? That still take a lot of new EVs come on stream. And when Janet Yellen comes to China and say, lecturing Chinese about the overcapacity, she's a great economist, but she took a very myopic, narrow view because no country is self-sufficient, right? It's always for the global markets, based on competitive advantage, right? Right now, for energy transition in general and the EV in particular, China is arguably the most efficient, the lowest cost producer, right? So actually it's good to have open markets, not only Chinese EV to serve Chinese customers, but also serve European, North American, and customers around the world.